I'm excited to guide you through today's webinar on expert tips for navigating Social Security in RightCapital. Social Security is one of the most important and can sometimes be one of the most confusing pieces of a retirement plan. So in today's session, we're going to talk all about helping you model it accurately and confidently within the software. We're going to walk through the different ways to enter Social Security within the current plan. We'll talk through how the calculation method works and best situations to utilize different options within RightCapital. We'll also talk through some tools to help you compare filing strategies and illustrate that impact to your clients. And we'll also talk through some best practices and settings to ensure your Social Security projections are as accurate and useful as possible as well. Hopefully, by the end of this presentation, you'll have a solid understanding of how to navigate these inputs and how to leverage RightCapital to create those meaningful Social Security conversations with your clients. As always, if any questions do come up, feel free to drop them into the Q&A box at any time. I will have time at the end of the webinar today to answer all those questions that you guys might have. And then lastly here, before we dive in, this session is going to be recorded. So if you happen to want to watch this back at a later time, or for anybody who might be able to who might not be able to attend today, this webinar will be displayed within the recordings area under the Help Center in our webinars page of our Help Center. And I can just show you how to get to that page a little bit later on today. And then as well as all of our registrants will get an email recording link to their inbox as well, if you ever want to reference this at a later time. So that all being said, thank you so much for joining me today, everybody. Let's dive in to this client plan. And the first thing I want to do is just take you over to our profile blueprint tab, just so we can take a look at who these clients are today. We can get familiar with who we're working with, and we'll have a good idea of these clients moving forward. I always like to recommend starting with the blueprint, even if you're doing something like a live client presentation. This is often a really nice spot within the software, as instead of having to go through all of the different tabs under profile to outline the net worth, goals, income, savings, and expenses, we have it outlined here nicely in a beautiful visual to not only display to our clients, but also to the client meeting, as well as we're going to have everything in one spot. So super nice here. We have the net worth laid out. We also have the accounts that are entered within the profile net worth tab that are pulling it in here, and they are broken out by owner. So we can see what's owned by Steve and what's owned by Penny. We can see at the top here, we also have a child in the plan. We will see under the goals tab, we're planning for the college goal for this child. If I scroll down just a little bit more to show you everything going on in the plan, we also have some stock plan accounts, some loans, and some insurance policies as well. These clients are in their mid-40s, and we are going to look at Social Security options for these clients later on. Taking a look at the goals tab as well, we can see here that college goal for our child. And then later on in the plan, we have a nice timeline here displaying the client's retirement ages at 67, as well as long-term care as we get a little bit later on in the plan. If you have additional goals that you enter within the goals tab of the profile tab, you can see them all display here as well. And I should also note that this is an interactive chart. So if there is specific information that you're noticing either in the net worth, goals, or the income, savings, and expenses tab, you can always click into these tiles to make adjustments right from this screen. So if you do happen to be going through this with a client in a live client presentation, you can make these adjustments right from this screen instead of having to bounce around the different tabs. So just easy navigation there as well. And then lastly, just looking at income, savings, and expenses, we can see what the clients are bringing into the plan, as well as what's leaving the plan and any savings contributions at this time. Again, super interactive visuals. You can click into all of these. Should maybe Steve recognize the salaries a little bit different here, we can make that adjustment. And that will flow over into the income tab if we do make an adjustment to the salary, or if we make an adjustment to any of the accounts under net worth, those changes will also flow into the net worth as well. But excellent. So now we have a better idea of sort of who we're working with today. Let's go through the first step of Social Security calculation, kind of where it all starts in RightCapital, and that's going to be with that data entry. So I'm going to scroll back up to the top here, and we're actually going to start in the income tab. And when you're first creating your RightCapital plan, you'll be going through that initial 6-step data entry, and you'll see Social Security as an option for both the client and the co-client. So I'll go ahead and click into the Social Security card here, and we can see we have some options for the filing of this client. We can control whether or not the client is already receiving Social Security with this checkbox up at the top here. If the client does happen to be receiving Social Security, that takes a lot of the legwork away from us. We can just check this already receiving checkbox and enter in the monthly amount that the client is going to be receiving, or I apologize, is already receiving. And then we can also enter in the filing age from when they originally filed. So if they filed back in at age 62, we can set that. If they filed at 67, you can customize this as needed, and RightCapital will utilize this to project the rest of the Social Security benefit out for the remainder of the plan. If they are not receiving Social Security, though, we can leave this box unchecked, and we can take a look at some of these data entry fields here. The first one being the filing age. We can click on the checkbox, the drop down here to either control directly by the filing age, or we can have it line up with retirement, or we can immediately just set it to that full retirement age in this case, which is 67 as well. If I scroll down here, so if we are to utilize maybe Steve's age, we can get specific on the calendar month that they're filing as well. So the system will pick the birth month depending on the birth date that's entered in the family tab. But you can also specify a really specific calendar month if you want some more granular control here as well. And then at the bottom here is going to be that estimated benefit amount field. Now, this is going to be the field that directly tells RightCapital how we want to calculate that Social Security benefit. There's 3 different options for calculating a Social Security benefit in RightCapital. And the first one is going to be use simple estimate. Use simple estimate is the default setting in RightCapital, and when we're using this option, no additional inputs are required in this card. The Social Security benefit is estimated using the income and projected annual increase that's entered in the client's salary card or their self-employment income card. So depending on how you have that income set up in the system, it'll look to either one, but it's going to be based off of those income cards entered in the income tab here. The income amount is then going to be projected forward and backward to generate that history of earnings, which is then used to determine the benefit amount. This is the simplest calculation for Social Security within the system. Again, just looking to the salary card, using that simple forward and back projection to estimate that amount, and then using that for the projection moving forward. So again, no legwork here, nice and easy. RightCapital takes care of everything. The other option we have here is going to be based on Social Security statement value. I would say this is probably the most common way that we see Social Security data entry completed within the system. When we're using this option, you're going to be prompted here to enter the client's projected benefit amount. So if you have that Social Security statement in front of you, we can start by entering the start age from the statement. This is important so we can get the correct projection length out here. So we can enter in that start age from the statement as well as plugging in that monthly benefit. RightCapital will reduce benefits or add delay credits to the benefit amount as appropriate as well, based on the filing age selected above. So RightCapital is taking into account delay credits or early filing penalties as well. So good thing to keep in mind here, entering that monthly benefit amount, RightCapital will take care of the rest for you. And then the last option we have here is based on historical covered earnings. And when we're using this option, we can see here a detailed worksheet is populating, allowing us to enter the client's annual covered earnings history. Once we fill these in, RightCapital will then use those earnings to calculate that Social Security benefit as well. If your client doesn't have any of this information, there is a helpful link to the Social Security website here where you can access information like finding historical covered earnings or locating your Social Security statement. So just a quick, easy link there as well for anybody who might not have any of that information and needs a quick way to access that Social Security website. We do include it there for you. So that's based on historical covered earnings. Again, using the earnings entered within the detailed worksheet here to create that projected benefit. And then the last option here is no Social Security. So one thing I also will note with this data entry is any of the other options here are going to automatically take into account if one or the other spouse is eligible for a spousal or a survivor benefit. If we select no Social Security, this is going to completely turn off the Social Security calculation for this client, including any eligibilities for spousal or survivor benefits. So it's important that if you are having a client that maybe does have a significantly lower benefit than their spouse, just be sure to plug it in using one of these three other options, and the system will take into account that survivor or spousal benefit. No Social Security is going to turn it off completely. Since we can't delete the Social Security card, no Social Security is going to be an effective way to almost mimic deleting this card and completely turning it off. So just a tip there when we're looking at the different options, utilize one of the three instead of no Social Security if we are anticipating that spousal benefit to come in. Excellent. So for the rest of the presentation today, I'm going to continue to utilize the simple estimate. However, you would feel free to utilize whichever option is most applicable for your specific client plan. But now that we've kind of gone over how to enter Social Security into RightCapital and how exactly that is going to behave within the system, I also want to talk about some additional settings that are also going to help us ensure that we're accurately projecting this out for this client plan. Those settings are going to be found up in the gear icon settings tab, and then we're going to be in the other assumptions tab. I do want to specify as well, since we are already within a client plan and we're in the gear icon settings of this client plan, these settings adjustments that we make are only going to affect this specific client plan. You can make these adjustments on a more global level to affect all client plans, but that's going to be done out in the advisor portal. I just wanted to make that quick distinction. We are within a client plan, so right now, these changes are just going to impact the current client plan that we are in. If we scroll down here, we have Social Security inflation being the first assumption here that I want to take a look at. And this is going to be the inflation assumption that controls the inflation on the Social Security benefit amounts that we've just entered within the income tab. This is something that is controlled by a global assumption. Again, so out in the advisor portal, we do have global assumptions. The RightCapital default for this value is 2.5%. However, if you do happen to have a client that maybe deviates from the norm, or we want to adjust this looking at COLA and you have some specific adjustments that you want to make, you can utilize a customized assumption here in the dropdown. This becomes available for you to manipulate, and we can make these adjustments within the customized assumption screen here. I will continue to use the global assumption, but that's an option there. That's where we will take a look at injecting a COLA as well into the Social Security calculation for the plan. The other option here being Social Security, if I scroll down a bit, we have an ability to adjust benefits starting in the future. So for clients who might be concerned about the sustainability of the Social Security program, this setting can be used to bake in a specific percentage reduction to all Social Security benefits starting in the future. So again, this is going to be a setting that allows us to bake in a specific percentage reduction to all Social Security benefits starting in the future. This is not going to apply to benefits that are already received. So clients that are already receiving benefits, this is not something that's going to affect that client. But if it's something that's occurring in the future, we can set this from no adjustment to reduce by, and then we can set a percentage here to reduce that Social Security benefit starting in the future. And then lastly here, we just have a discount rate used for optimization. This is just going to allow us to apply a discount rate to the Social Security optimization tool. I will touch on the Social Security optimization tool just in a moment here, but just wanted to touch on those three main settings here for Social Security. Again, that inflation assumption, adjusting benefits starting in the future, and then that discount rate. We can set it to no discount. We can apply a general inflation assumption or a completely customized discount rate, which again opens this up for you to make your adjustment. And then if you're making any changes to any of these assumptions, always be sure to hit save at the bottom so that saves within the client plan. Excellent. Alrighty. The next area in the software where Social Security does come into a play quite often is going to actually be the retirement tab along the top here. And we're going to land when we click on retirement in the analysis tab under probability. Now, before I even dive into Social Security within this probability tab, I just quickly want to touch on this green bar value and this large probability of success for anybody who might not be familiar in what that directly means. This is going to be the result of our Monte Carlo calculation. So RightCapital takes all of the inputs in our plan and runs it through a Monte Carlo calculation. That is meaning we're taking all these inputs and running them through 1,000 trials with random return scenarios and volatility. The percentage of trials that make it to the end of the planning horizon without running out of funds are considered a success. In this case, 620 out of 1,000 Monte Carlo trials are making it through to the end of the planning horizon without running out of funds. The median ending portfolio value is a direct representation of trial 500 of that Monte Carlo. So this isn't saying that this is exactly what the clients are going to end up with at the end of the plan. It's just a visual representation of that very middle trial, kind of to give us a pinpoint idea of the range of possibilities, again, with all those random return scenarios and volatility. The best way to kind of visualize this median ending portfolio value is actually going to be in the confidence tab. We can see here this blue shaded area is displaying that range of Monte Carlo trials starting from the very beginning of the plan, projected all the way out until the very last year of the planning horizon. And you can see here as I'm hovering my cursor over the chart, we're getting these detailed values of what all these numbers actually are within the chart. And we can see here this deep blue line that follows the middle of the chart. That's our median trial, trial 500. And you can see if I hover my cursor over the very last year of this projection, the median 1.972 that we're seeing there directly corresponds to that median 1.972 in the green bar value. Just wanted to point that out for anybody who wasn't familiar. We can see here again, this is displaying for the current plan and the proposed plan. The current plan is everything under the profile tab, that base case, and the proposed plan allows us to make those what if scenarios and really bake in those deeper financial conversations with the clients. So by default, proposed plan starts off as identical to the current plan, and then the action items down below is where we can really start making those changes for our what if scenarios. In this case today, we're going to be talking all about Social Security, and we can see here down in the action items on the left hand, or on the right hand side, I should say, oh man, am I in Friday mode? We have Social Security strategy displayed right in our strategies tab here. Now, we have a drop down. It's going to pull from the current plan, the current strategy. And in the current strategy, both of these clients are filing as early as possible, right at age 62. However, within the drop down here, we can utilize the optimal strategy, which I will touch on in a moment. But on top of the optimal strategy, you can also take a look at filing on different timelines here, maybe at full retirement age. So we can take a look at what that difference does. We can take a look at passing it all the way to age 70 and really delaying that Social Security benefit. We can also look at filing right at retirement, and we can see here, let me make that change. I'll set it to age 70 and I'll hit refresh here. And we can see this impact in real time on what it does to our Monte Carlo calculation. It does bump up our probability of success. We are definitely benefiting on some significant delay credits, waiting 62 to 70 here. So really great to just see this happening in real time if you happen to be talking through it with your client in a live sort of scenario here. And then should your Social Security strategy entail a different age for both clients? Maybe one client's more comfortable filing for Social Security at one age, and the other client doesn't want to wait as long or maybe prefers to delay a little bit longer. We can utilize a totally customized strategy here by clicking Customized, and then we can control the specific ages for both of these clients. So maybe Steve is more comfortable waiting until FRA, but maybe Penny only wants to delay it another 2 years or so, and she really wants to get that benefit a little sooner. Oh, 64. There we go. Oh, my customized values here. Let's see if I can get that to go. I don't know why my numbers keep changing on me. It must be a Friday thing. Let me refresh my screen here. If this continues to give me issues, I'll jump into another client plan here and we'll get this show back on the road. Here we go. That went through filing at retirement, and I believe retirement is 67 for both of these clients. Let's try doing full retirement age. It's the same as 67, but see if that gives me an error. Excellent. Okay, I think refreshing the screen helped us out a little bit here. Sometimes if you are noticing little issues within the system, a good screen refresh always helps. I know product support definitely recommends that to some of our advisors sometimes, depending on what could be going on. So love a good refresh every once and again there, but thanks for letting me figure that one out there. But let's go ahead and also talk about this optimal strategy. So we can see here in the drop down, we can select these different strategies to see the impact in real time. But let's take a look at what this optimal strategy is. RightCapital is calculating the optimal Social Security benefit for us, and how's that happening and where is it coming into play. So I'm going to scroll back up to the top here. Oops. And we're going to get to our Social Security tab. Now, our Social Security tab is our Social Security Optimizer tool. This is looking at the inputs of the plan and helping us identify the optimal Social Security benefit for our clients. We can see here we have a nice chart giving us an annual cash flow comparison, displaying the optimal strategy versus the current strategy. We can see the income sources for every year of the chart, and we can see here the optimal strategy and what that's bringing in versus the current strategy as well. Optimals in the blue line, currents in the gray, and we can see throughout the plan that if we do wait until 70, we are getting those delay credits. It really is bumping up that Social Security benefit for the plan here. If we scroll down just a little bit more, we can see what the system is actually recommending to obtain that maximum Social Security benefit. In a lot of cases, it is going to look like age 70. RightCapital is looking at solely maximizing the income from Social Security. In not every circumstance, it's going to recommend 70. However, 70 is going to be a common recommendation, as again, in most scenarios, a lot of clients will benefit in terms of their Social Security benefit by waiting till age 70. So that's a common recommendation we see by the system, but every client plan looks different. And then here along the top, we also have the ability with some additional drop downs to click on comparing maybe the current strategy versus full retirement age, and it gives us a nice dollar value of how much more or less that strategy is going to be bringing in for us. So we can see here filing at full retirement age versus age 70, and we get 497,000 less over the length of the plan by picking this different strategy here. And then another key piece that's really important when it comes to having this discussion surrounding uh, Social Security is going to be this sort of key longevity question, essentially. How long do I need to live in order to have a break-even point between these two strategies here, right? So let's set it back to optimal versus current, and we can take a look at this drop down in the chart here. You'll see this down caret next to the title, and we can see here we have our cumulative cash flow comparison. And this is going to show me that at age 77 is really when I will benefit from utilizing the optimal strategy versus the current strategy. So that really takes into account, like I said, that longevity question. Do we anticipate the clients living to this age? Is this something that is doable? Taking a look at family history and just really, again, navigating that conversation with some metrics that the system can give us to really give us a guiding hand on how to approach what sort of longevity conversation we want to have with the clients, and really honing in whether or not that optimal strategy does in fact work best for the specific client plan. Again, it's a technology, it's recommending the best it can based on the inputs in the plan, but there's always a human aspect we have to have as advisors with our clients, just ensuring that this truly is optimal for the clients. Another way to really ensure that this is optimal for the clients is not only looking at it in the Social Security Optimizer module, but also bringing it back to the analysis tab. You'll remember in the drop down here, we had this optimal strategy within the drop down. And when I set it to the optimal strategy again, filing to age 70, we can see what impact this has on the plan. So it's always great, again, have the conversation in the optimizer tool, talk to the clients through it, but also bring it back into the proposed plan and just ensure that we are really seeing a benefit by encapsulating all of the other items within the plan as well. There are also some really helpful visuals within the retirement analysis tab as well that are going to help us really show the impact of this different strategies on the client plan as well. The first one being the comparisons tab. We can look at different scenario analyses here. That's just going to, again, provide more helpful visuals for our clients. We can see here looking at the difference in invested assets between the proposed and the current plan. I'm seeing significantly more ending assets than the current plan from the proposed plan. And again, all we changed is this optimal strategy here. We can also look at the difference in net worth, the difference in taxes. This is super helpful as well if you're doing something like Roth conversions. Love to throw that in there. Super helpful. And then we can also take a look at the different assets in retirement between the current and the proposed plan as well. So super helpful to see the differences there. And then one more chart that also really highlights some key information is going to be the retirement details chart. This is a super popular chart with our advisors. It highlights mainly the income sources of the proposed plan, looking at the percentage of income that's stable. And that's going to be income like Social Security, which we can see at the bottom of the chart here. That Social Security income is considered stable. Pension and annuity income are also considered stable income. So if you have those three items within the plan, they'll all be calculated to get this income is stable percentage. In this case, we see 38%. So again, just super nice to see what that guaranteed income is coming into the plan. They're really showing the clients bolstering that retirement benefit later in years as we're getting closer to the end of the planning horizon, maybe preparing for long-term care. This can help us kind of pinpoint where we might have some shortfalls as well. As you see, the red will display if there happen to be any shortfalls in the plan, really helping us highlight areas where we might need to improve. Clicking on the drop-down chart, though, we also have some other metrics as well, things like the withdrawal rate, retirement spending. The income comparison can be a really helpful chart for this sort of conversation as well, just showing, again, stable income between the current and the proposed plan. We can see the differences there, what percentage of the income being stable, what's making up Social Security, and then what other income sources we have here. Super helpful visuals. And then we also have our total spending comparison again. So I really do think for retirement details in terms of that Social Security calculation, the income sources and the income comparison are going to be really two great visuals for this conversation. On top of this, let's also take a look at what happens kind of behind the scenes underneath the hood of the RightCapital car. And I always like to point my attention to the cash flows when taking a look at this information. And the cash flows are super helpful because, again, it gives us that year-by-year breakdown of what's coming into the plan, what's leaving the plan, what is our net flows, are we saving money at the end of the year, are we short at the end of the year. So super great information here. And the first page we land on within the cash flows is going to be this Maps tab. This is a highly visual chart. A lot of clients really like it. Again, just highlighting 1 year at a time of our cash flows. The slider along the top here is going to allow us to pinpoint a specific year. And so let me just go a little bit further on in the plan to when our Social Security comes in, and we can see here our Social Security income coming into the plan. If it's underlined when I hover over it, it's something I can click on. This is going to break out the individual retirement benefit for each client as well. So we can see here what percentage of, or not percentage, but what amount of this dollar value is Steve's and what is Penny's. So we can see, again, the sizes of these colorful blocks here are directly representing the amount of funds. So we can see because this 185 is smaller, expenses at 299 are significantly higher. We're really seeing a difference in size here as well. So just nice visual here to really show what's exactly going on under the hood in a specific year. And we can always, go project forward a little bit more. We can see age 75 has come up. RMDs are now kicking in with those plan distributions, again, distributing from the 401k. So super nice here. We can even go all the way back to before Social Security even kicks in, and we see the salary coming into the plan as well. So super helpful graph here. And then I also want to just show you the summary tab. The summary tab is a more sort of table view, line item going year by year of the cash flows. This is specifically looking at the client's inflows and outflows for this plan. I just want to bring your attention here to show you where in this area we can find our Social Security benefit. That is going to display in our income inflows column. And you'll notice the chart headers are underlined. Anything that's underlined in RightCapital, I recommend trying to click on it. You most likely can get some more information behind the scenes here. And if we scroll down, we can see the income inflows for this plan are made up of Social Security and our salary. And if we scroll down here, we can see we do have the proposed plan intact, where we set the optimal strategy. So the clients are delaying their benefit till age 70 right now. So we can see here with a really nice helpful visual showing us in 2045, when these clients are hitting their retirement, their salary is stopping. We have a 3-year income gap here where we have no income coming into the plan until we file for Social Security. If I back out to my summary tab here, we can see all the way on the right-hand side, we have some negative net flows coming into the plan. This is representing the funds that RightCapital is pulling from the different retirement accounts to cover this cash flow deficit. So it's just showing us here, hey, we have a couple of years where there's no income in the plan. Do we have enough to buffer this gap? Do we need to maybe look at filing for Social Security earlier? Is waiting till 70 maybe not ideal? So again, just opening up the conversations for answering those questions and just really ensuring if we are set up correctly for this specific strategy. And again, the net flows column is representing the funds that RightCapital is pulling out of the retirement accounts to cover cash flow deficits in the years where our outflows are higher than our inflows. If you're ever curious from which accounts RightCapital is pulling those funds from, we can click on the Accounts tab in the upper corner here, and then we can select Withdrawals from Accounts. And that we can scroll down here and see from which accounts we're pulling those funds from to cover that cash flow deficit. In this case, it looks like we're depleting the taxable account. And then once the taxable account is depleted, we then start withdrawing down from the tax deferred bucket. That's the typical sequence when it comes to covering cash flow deficits. RightCapital will look to pulling from the withdrawal sequence from the taxable account first, then the tax deferred accounts, then the tax free accounts. However, you do have control to adjust that withdrawal sequence if you don't want to maybe target the taxable accounts first. And that again is going to be found in our gear icon settings tab. And then right here in our methodology tab under the withdrawal sequence, we can see taxable, tax deferred, tax free is the order that these accounts will be used to take the withdrawals from when we're in a cash flow deficit. But you can always make an adjustment and utilize a different withdrawal sequence if that is something that you're interested in proposing for these clients. Excellent, excellent. Let me just back into Social Security here as well within the cash flows. One other thing I do want to note here, if you are within the cash flow summary looking at the income inflows and you click into Social Security, we can see the benefit that breaks out for each client individually. And then another thing to note here as well, if there was an applicable spousal benefit for either the client or the co-client, we would see a column dedicated to that amount that would be needed to meet the spousal benefit as well. So we'll see that broken out here if there is an eligibility. Again, RightCapital takes account of that automatically, so you'll just see it displaying here for you. Excellent. Alrighty, one more area too here that I want to direct your attention to. Say maybe we have a situation where we're still looking at that idea where Social Security concerns in terms of the Social Security benefits being reduced later on in the future. I know there's that question of Social Security sustainability. I do want to bring a look at the stress test. The stress test is going to be a super cool area in the software, allowing us to model more uncontrollable scenarios that could happen. You know, within retirement analysis and those action items, we can really control our direct scenario. However, the stress test is going to allow us to bring in some larger impacts on the plan to see how we hold up. If I scroll down here, we can see a series of bar charts. This is going to rerun the Monte Carlo, taking a look at the different items within the action items down below. This is going to allow us to apply stressors to the plan. Each stressor that we apply is going to rerun the Monte Carlo, and it's going to give us an idea of how that's going to impact our probability of success. So we have our baseline probability of success right now in this plan is 68%. Using the action items down below, we can see here there is an action item for reducing Social Security. So we can take a look at what happens to our probability of success if Social Security is reduced by 30%, for example. I'll hit refresh. This is going to rerun the Monte Carlo simulation now with a reduction of Social Security by 30%. We can see here again, the baseline is 68. And then if I find my Social Security bar chart, it's taking my 30% reduction. That's going to bring our probability of success for this plan down to 53%. Now, I will also say that there's a lot of other bar charts and things going on in this plan. So if we really want to just isolate the impact of Social Security, maybe you're just having a Social Security conversation that day with your client, you can click the edit button down in the bottom corner, and we can select to hide these other items by unchecking the boxes. This is going to completely isolate one of the specific items that we have selected, in this case, Social Security. And if I click on the, once that's finished loading, we can see here now, baseline 68%, Social Security 53% probability of success for this plan. We can really model an extreme scenario. What happens if we almost completely lose Social Security? And what does that do for this plan? So again, it really can really help us either boost confidence if the probability of success stays high. It says that we're really bolstered for anything that could happen. In this case, it's dropping really low. So maybe again, highlighting some additional conversations. If we are really concerned about the longevity of Social Security, we can really back down and reverse engineer a plan to figure out how we can bolster our probability of success should something like this happen. Excellent. There is one other item within RightCapital that I want to talk about in terms of Social Security, and that's going to be Social Security within a single client plan. Within a single client plan, you do have the ability to enter something like spousal and survivor benefit from either a deceased spouse or an ex-spouse. And that's something that's only eligible when you have a single client plan. So let me just back out of here and find a single client plan, and I can show you what that modeling looks like here. I'm going to pop into my Joe Smith plan. This is a single plan here. And if I go over to my profile tab, again, we're going to our data entry. I want to show you how you can enter in a survivor or a spousal benefit from an ex-spouse as well. If we go to the income tab here, let me delete the spoiler that I was testing earlier, and I'll go ahead and click add income here. I'll click other, and then if I hover over other, we have spouse Social Security as an option for us to enter into the plan. Now, again, starting at age 62, just for some context here, spousal benefits are available to clients even if they've never worked towards Social Security credits. If a client's spouse qualifies for Social Security, the spousal benefit can provide up to 50% of the spouse's primary insurance amount, that PIA number there. Spousal benefits are also subject to an early withdrawal penalty. So if you file before that 62, you're subject to an early withdrawal penalty. You are not eligible for delay credits after full retirement age. So there's really no benefit to taking that spousal benefit after 67 as well. So with joint plans, again, RightCapital is automatically going to calculate this this spousal benefit for you. But then, of course, with one client, we have this ability to enter the Social Security card. So as I've been talking, I'm sure you've been looking at all of the different inputs here, so I might not have to go through all these in much detail. But we can see here, you can, of course, title the income name, whatever is best for you. You have the relationship to the spouse. So if it's an ex-spouse, the system's already baking in that you've been married for 10 plus years or that that client was married for 10 plus years. Or if the spouse was deceased, we also have that option as well. So let's go through the ex-spouse data entry first, and then we'll click on the other one. The information down below past this point is going to be information about the former spouse, not about the current client. So I will specify that one more time. This information below is for information about the former spouse. If they were already receiving, click that that checkbox, enter in what the former spouse was receiving, when the former spouse filed, the life expectancy, and the former spouse's birth date. That's going to allow us to utilize that information as accurately projecting that benefit out into the future. If the former spouse was not receiving Social Security yet, we can enter their monthly full retirement benefit amount, so that PIA number, enter in the date of the divorce, the birth date of the former spouse, and the life expectancy there as well. So again, all information about the former spouse here. RightCapital will then utilize this information and project that Social Security benefit, where we will see that again in the income inflows column of the retirement cash flows. If we are looking at entering, unfortunately, a deceased spouse, it's going to be very similar. Again, if they're already receiving, enter in that information about the former spouse. And if they are not already receiving, we can go ahead and enter in that PIA value, as well as the birth date of the former spouse and when the former spouse passed away. So good information here for entering Social Security information for a single client plan when we need to calculate spousal benefits. Go ahead and remove this here. And then one final thing I also want to touch on, if the client is still working while taking Social Security, RightCapital will take into account an annual earnings test adjustment. So I just want to take a moment here to explain this as well for anybody who might be curious on that earnings test adjustment. If we have the client filing for Social Security at age 62, but they're retiring at 67, so their retirement age is 67. If we go over to the retirement cash flows summary, income inflows, Social Security, we can see here the system is automatically taking into account that retirement benefit. The client's filing at 62, but they are not retiring until 67. RightCapital will automatically apply that earnings test adjustment for you in this system. So a lot of things the system's taking into account automatically for you. Spousal and survivor benefits, if it's a joint client plan. Earnings test adjustment, if it's a client that's still working. If it's a single client plan, you have the ability to enter in that spousal benefit that we just took a look at. And of course, you have the ability to enter Social Security for each client and the co-client within a joint client plan.